really important to have some heads up about taxes and about what you need to do if you have a file and you're going to file, understanding if you're a farm or if you're a business, really what you need to do. For many years, we have farmers who have filed but didn't understand that they could have carried certain losses, but because they didn't understand just how that works. And the reason we push for record keeping, everybody, I don't care what you do, you need to keep records. Anything that you purchase for your land, do for your land, even for your homes, you know, if you're doing any improvements, whether you need to keep track of it. So today is designed to help those farmers who haven't filed their taxes or business people who want to have to file but just don't know exactly what forms or just how intense that looks for the future. There's been some changes this year. I do taxes as well. And when I looked at, you know, the changes in what is standard deductions and things that we claimed last year that we don't claim this year. So we have invited some wonderful people to come. Alex, I have a really hard time pronouncing your last name.
Equus.
Equus. And Alex is here, and she is a part of a group that we have been working with, and that is Good Agriculture, and we're excited to have her. And also we're excited to have with us from Congressman Bishop's office, our district director, Mr. Drake is with us this morning and give us some information. We realized we hadn't had a farm bill in a while, but there's still one on the book somewhere. But what's happening, what's going on, and what can we play a role in that? Also, I have with me one of my favorite people. She's one of my farmers, and she's also businesswoman, entrepreneur, and she, we grew many acres about 4 years ago, Dora, of hemp, and ran into some problems. And so when you're doing things and you're connecting with people, you really got to make sure you know who you're working with and who's really got your best interests at heart. So I'm pleased to have her with us today. She is Tax Master 22 LLC, and she is a great person to know. She's really good. She's located on East Broad Avenue, so she's got some cars. So I just want to thank you all for coming. And at this moment, I want to take a moment of silence, just a moment to say thank you to whomever your savior is or who you trust, so that we can go into this meeting all in one. Just a few minutes just to say thank you. We thank you, Father, for all your love, all your kindness. We thank you for everything that's happening, and then we know that you're going to make it right. Wherever it's crooked, you'll make it straight. And we just thank you for the opportunity to come together to educate and engage our people so that as we go forward, we will understand the path that we're on when it comes to agriculture. Thank you for our speakers who have traveled here, and when they travel back, keep them traveling great. Thank you for all our participants. Pray that this day goes according to your will. In Jesus' name, amen. At this time, we're going to bring up our district director, Mr. Dukes, to talk to us about what ward are we in?
Second district.
Second congressional district. So he's going to talk to us in his own way.
Good morning.
Good morning.
That was about a 7.5 out of 10. Good morning.
Good morning.
My name is Christopher Drake from Congressman Bishop's office. It is truly a pleasure to be here this morning with you. Glad to be in front of you in terms of representing the Congressman along with our Chief of Staff, Mr. Cuss, and also Tanisha Blocker, who's our Ag Policy individual, one person in Columbus, or rather in DC. I was going to actually read presentation, but probably about 5 o'clock this morning, the teacher in me came out and said, you know, a lot of students, when I taught them, they're visual learners, you know, and then also in terms of trying to keep attention, I got up this morning, I said, let me put together a PowerPoint presentation. So after 29 years of teaching, some of those skills are transferable in this particular position here. I've been with the Congressman for about 3 years, a little bit over 3 years. And what I would like to do is just briefly give an overview of some of the things that have happened since last year in terms of the Farm Bill, and also what's happening even as we speak with the Farm Bill today. In looking at Southwest Georgia project, we know it has been a great partner to farmers across the state. In 2021, Congress gave USDA about $2.8 billion to support underserved farmers. With that funding, $125 million was given to over 30 organizations, including Athens Land Trust and the Federation of Southern Cooperatives, who are tasked with providing a variety of services for underserved farmers and ranchers. Some of those services included mediation, financial training, capacity building training, technical assistance, cooperative development, along with agricultural credit support. Underserved farms and small farms need these services in order to enhance their financial literacy, to record keeping and bookkeeping, or for record keeping and bookkeeping, also for crop insurance training, business plan development, loan restructuring, along with tax planning and more. The truth is that many loans and grants are distributed to those who are familiar with the application process and treat their farms as business operations. Every farm is a business, whether it's making money or not. And it is crucial to have specialized expert knowledge and training to help with financial assistance planning, market planning, succession planning, land access assistance, and more. You'll find that technical assistance is essential in helping farm businesses solve problems, whether it's related to building capacity or improving performance. That is why events like this, we are grateful for Southwest Georgia Project to walk alongside farmers and supporting them in various ways. Combined with business and entrepreneurship training from Fort Valley State University and the University of Georgia Extension programs, we can empower small farmers and landowners to acquire capital, integrate new technologies, and use estate planning and tax incentive programs to retain operations and to also increase profitability. You know, there are two incentive programs that exist already in USDA when it comes to farmers and ranchers. One is the Environmental Quality Incentive Program, which is also known as V.O.I.C.E.S. It's designed to help farmers maintain or improve production while conserving natural resources on their land. And also CRP, Conservation Reserve Program. It helps those with environmentally sensitive land to establish long-term vegetative cover, particularly when you deal with runoff and things of that nature. The sign-up has ended for V.O.I.C.E.S, but CRP enrollment is open now until March the 20th. Check with your USDA, NRSCS, or FSA office for additional information. There are 3 livestock disaster programs through USDA. They include Livestock Indemnity Program, along with the Forest Disaster Program, and also the Emergency Assistance for Livestock Honeybees and Farm-Raised Fish Program. You'll find that LIP makes payments for livestock death losses. LFP focuses in on payments for grazing losses due to fire or drought. When you deal with ELAP, it covers losses from disease, feed shortages, along with wildlife and natural resources or natural disaster. Now, included in last year's one big, beautiful bill, or ugly bill. That's why I put that dash there. It depends on your perspective. And I try to stay away from I have to serve everyone, you know, but it was kind of hard to put beautiful in there. You know, you're right. But included in last year's bill was HR 1, the Farm Bill, an aspect of the Farm Bill, which included safety net improvements that Congressman Bishop supported. Some of these areas for safety net for farmers include commodity support, funds for disaster assistance, also changes to the crop insurance, as well as conservation and forestry and research. For example, when you deal with safety net improvements for commodity support, it includes the increases to reference prices for cotton, peanuts, and other crops under agricultural risk coverage, along with price loss coverage, known as ARC and PLC. Also, some of those supports allow new base acre opportunities for producers to plant and cover commodities between 2019 and 2023. HR1 increased payment limits for ARC and PLC, and it also increased marketing assistance loan rates. In terms of improvements for farm for disaster assistance under HR1, it increased and improved coverage under livestock indemnity program, along with livestock forest disaster program mentioned previously, as well as ELAP, and also for TAP, tree assistance program. For crop insurance, in HR1 from last year's bill, it expanded the definition of beginning farmers from those that have been involved for 5 years up to 10 years. So it changed from 5 to 10 years. It also increased premium subsidies for beginning farmers, and also created a pilot insurance program for contract poultry growers. Again, HR1 also contains increased funding for several USDA conservation research and other programs. However, some of those programs and improvements were funded with money that was taken from the SNAP program. We know how SNAP was, the impact that SNAP had on so many people in our community. In terms of conservation and forestry, the bill withdrew and repurposed Inflation Reduction Act conservation funds from EQIP and other programs, as I just mentioned. For example, $1.8 billion was redirected from conservation programs, and $150 million was pulled from forestry programs to help fund safety net improvements. Funds were reallocated to support USDA programs like feral swine eradication and control pilot programs. Oftentimes when I go to some of the ag meetings, I be careful how I say this. There have been several meetings with farmers when it comes to feral swine hog issue, the wild hog issue. And it seems like everyone needs to get on the same page with that, because if we don't, we'll be throwing away money. What I mean by that is, there are some farmers, say for instance, we have a farmer, a neighboring farmer that, let me switch. If you are trying to get rid of wild hogs on your land, they're destroying your crops, and you're making a concerted effort to do that. There may be a neighboring farmer in your area that's actually not trying to do that. They may be actually bringing in hunters in order to try to make money off bringing in hunters to shoot the hogs. And they're not necessarily trying to shoot enough to get rid of them. They want to continue that as a possible way in order to make money by bringing in hunters. Hunters have to pay them, and then so we're used to, in some cases, farmers are bringing in pest control individuals to get rid of wild hogs. But there are some farmers that I've heard, they actually encourage wild hogs so that they can bring in people in order to shoot them, and those people would have to pay them money. So imagine if you're a farmer that's having a problem with feral hogs, trying to get rid of them, and someone down the road is encouraging the population growth. So it's just going to be an ongoing issue. I just thought I'd mention that. In looking at the next bit of information, in terms of research, from last year's Farm Bill, HR1, it included $37 million towards Foundation for Food and Agricultural Research, $60 million of scholarships for students at 1890 institutions. We'll come back to that shortly. There are also $8 million for agricultural program, assistive technology program for those farmers that may have disabilities. It also provides $125 million annually for modernizing agricultural research facilities and reauthorizing urban and indoor agricultural research through 2031. I'm almost done. Congress authorized over $30 billion in emergency farm assistance on December 21st, 2024, known as the American Relief Act, which included $10 billion of one-time economic assistance payments, which is known as ECAP, and $20.78 billion in one-time disaster relief for 23-24 weather events, like Hurricane Michael and Helene. Please keep in mind the following deadlines. USDA Supplemental Disaster Relief Stage 2 deadline is April 30th. Also, on Monday, it was announced that Georgia will be receiving, and they had announced it earlier this year, but it crossed the finish line. Georgia will be receiving $531 million for those farmers in those areas, those counties that were impacted by Hurricane Helene. This window will open up on March the 16th. The application will run through April 27th. It's a six-week period. Details for this can be found on farmrecovery.com. At the end of last year, in December of 25, Farmer Bridge Payments Program came about for those producers who certified their 2025 crop acreage by December 19. They're eligible. Deadline for this program to apply or enroll April 17. February 13th, last month, assistance for specialty crop farmers, producers who are able to certify their 2025 crop acreage by March 13th, 2026 will be eligible. Again, please make sure that you visit farmers.gov to learn about funding opportunities at USDA and also use the tools to determine what best fits your operation. The Farm Bill. Now, what I just shared with you, a significant amount of that was related to the Farm Bill that was passed last year. They're in the process. When I say they, the House Ag Committee began the process of marking up the new Farm Bill yesterday. And there are a few programs that have bipartisan support, which includes the idea of expanding the types of crops eligible for federal insurance. I don't like that, y'all. Okay, with that dash, but you'll find that there's support on both sides of the aisle in terms of the idea of expanding the types of crops eligible for federal crop insurance subsidy. However, we know that with Congress, there's a lot of differences. We know one of the things is, from the Democratic standpoint, they want the SNAP program and things that were good from the SNAP program. Many of those things they want back included in farming. So that's going to be a huge stick. There's also an amendment that was offered by a Democratic representative to expand the funding for 1890 institutions so that it's not just ending in 2031, but it continues. So those are some things from that have been proposed, amendments that have been proposed, but in terms of Farm Bill update as of what they're doing now, they want it yesterday. Actually, they were supposed to start last week, but they postponed it to this week. But they're just in the first stages of trying to nail down Farm Bill, and that's my update. You know, it's very fluid. As I was talking to Gus, he said the only thing we can say is the fact that it's Farm Bill in terms of what's going to happen. We are not sure. We just have to wait because it changes from day to day. There are some things, a few things that they are on the same page, but there are several things that they are on opposite ends of the spectrum. Are there any questions? Yes.
You were talking about wild hogs. Is it okay if I ask you a question about it?
That's fine.
Okay. The reason I'm asking is because wild hogs have been a problem out at our place. And what's happening is they're coming out to kill wild hogs and apparently not finding the ones that died. So we've got a buzzard situation. And I've been trying to get rid of buzzards for almost 2 months because they are so plentiful until their feces, from what they're telling me, their feces is acidic. And as long as they were not getting on the roofs of the houses and stuff, I was just gonna try to wait them out. But they got to where they're getting on the top of the house and stuff like that, and they're saying they can destroy the roof with their acidic waste. And we can't kill them. So I've been, doing the explosion, the pop, what do you call them? Scare them away, trying to just scare them away. So what happens if farmers have damaged roofs or whatever because of these buzzards and we can't kill them? What do you, is there any alternative? Do you have any, is there any suggestions as to what we need to do to get rid of them? Because I'm not talking about 10, I'm talking about 20 or 30 buzzards. And when they're roosting, it smells horrible.
I know that we've had a couple of folks to reach out to our office about this. I remember one small town, they had huge problems with buzzards roosting, just sitting there on their tower in the water tower. I mean, there were not just 20 or 30. If I recall, I think one of the suggestions was, I don't know how much it would help, reach out to DNR, see what they suggest, and I'll follow up also. Send me an email also. That's what I put. Make sure that if you have any questions, I don't have to leave short. If you have any additional questions, please send me an email at Christopher. And that V should be Christopher.Drake@mail.house.gov. But so the hogs that are being killed, the individuals that are killing them are not responsible for removing them.
Well, I think if they're killing them and they may be getting away from them, they can't find them. That's the only thing I can think of that might be the reason that there's so many of them. So I called and I'm like, what do we do? Sorry, we don't have any alternatives, but if you kill them, you fucking have a problem. I said, they're killing me.
Send me an email so that I can pass it on forward, and also in the meantime, reach out to PNRC. What are their suggestions?
Well, I talked to them and they told me to order the bangers, and that's what I just shoot up. It's kind of like firecrackers. It makes a loud noise. Because you have to do it, you have to be consistent, because if you don't do it every day and they come back, then you have to start all over again. So that's what I've been doing, every day, is going out and scaring them away.
How long has this been going on?
I've been scaring them away now for a week.
Yes, sir.
My question is business technical. In the summary, there's a proposal for small farms, and how do we relate or give information providers to support small farms in the farm bill?
Send me an email. And then also, I think I have your number. I will text you. Contact folks for Senator Warner, Ossoff's office. These folks for Senator Ossoff's office, President Williams, for Senator Warner's office. I'll share the information with you.
Does it appear in the chain of the proposal for the next farm bill, small farms are not there, so small farms need to be represented. Because today, when something happens, most of the money is given to acreage. So there needs to be something to consider for small farms to go through the same disaster, the same challenges that we have with crops, whatever, hurricanes, whatever. But if we don't receive something, it makes small farms almost disappear.
And I know Congress also talks about farms, in particular small farms, and making sure that folks in rural areas are not forgotten about. So we'll just reiterate that. On matter of fact, I have a call at 10 o'clock. Staff call and I'll reiterate call to the entire staff. So that that's definitely considered. Which I already know it is, but it doesn't hurt to remind folks.
Well, that's true. And most of us respond to it. That is the, sometimes we're going to give people say something. They don't say 100 people say something. It may be 1,000, but I'm using that. It makes sense.
All right. Yes, sir.
Hi. My issue is crop insurance. And it's in Mitchell County in particular, the state came out and said that there was enough insurance agents in Mitchell County that FSA did not have to provide NAP. Yeah, they eliminated from being offered at the FSA office. NAP was NAP and Blue. It was the two free insurances that you could get through the FSA. And so I got it 1 year, and then the program was supposed to roll over to the second year, but then they eliminated it. And then they said because there was enough insurance agents selling insurance in Mitchell County that they didn't offer it anymore in Mitchell County. And that's problematic because if you don't qualify, if you have production, you got to have somebody with insurance come out and check your crops. And if you don't have the actual production to meet whatever goals they want you to meet, you don't get any insurance. So with the weather for the last few years, the production is not done what it should be. And so therein lies the rub. I still don't have crop insurance.
Let me get your information.
Okay.
Any additional questions?
Good question. What about insurance for individuals that work on the farm? They get hurt or something like that, so you can cover the farm and, from lawsuits. Nowadays people
Anyone had experience with that? Individuals that actually work on the farm. The reason why I'm asking is because sometimes I'll include folks that have actually experienced the hurdle that individuals that are actually working on the farm, and you're looking for insurance.
Yes.
You can get an umbrella policy, but we looked into it, and insurance itself is expensive.
Yeah, a lot of the folks we work with have workers' compensation insurance for that, but for farms it is expensive. It's because it's high risk of something happening. Unfortunately, I don't think FSA offers any, or USDA offers anything on that though. Not that I've seen.
And just like I said, just send me a follow-up email. Please send me those emails if you have additional questions so that I can give you a detailed response. And the reason why I ask that you send me an email is because no one is going to be as passionate and as detailed with specifics as you are. By the time I get to the, maybe I shouldn't tell you all this, but by the time sometimes I get to the office and go back through some of the things that shared with me, I've retained 30% of it. 30% of it. And so that's why it's important that you send me an email so that I can respond to you specifically with specific things that you have. Are there any other questions? All right. We appreciate your attention. I know that I'm not sure whether you all expected the update that I gave. but we will continue to do what we can from the Office of Commerce and Bishop to make sure that we get resources that you deserve and you need in the second congressional district here in Southwest Georgia. Thank you very much. And
all right, thank you so much, Mr. Duke. And we hope everybody got his information. Y'all got questions? Drake. Yes, yes. That's how we know how to do it. I'm sorry about that.
That's fine.
Thank you for coming today. And I hope everybody heard something that will make a difference or the opportunity that you need to contact a particular person in order to take care of your situation. At this time, I'm going to ask Ms. Alex. She's going to come up and she's going to talk to us about farm business planning. And she is the CEO of Good Agriculture, and she's out of Atlanta. So hopefully she has some great information for you. And if y'all have questions, please feel free to ask them. Don't be afraid to ask questions. Thank you.
Hi everyone, thanks for joining today. Let me get this pulled up. My computer decided to turn itself off in between the trip from my chair up here. Not really sure why. But I'll cover quite a few different topics related to farm finances, and I'm going to touch on some of the tax stuff. The way Ms. Nora and I are going to split kind of the tax topic is I will cover a little bit more of like which number goes into which box, and then she's going to cover the more of like how do you actually optimize your tax situation. And I've got a surprise Microsoft update here, so just give that a moment. But as far as going through this, so we'll go through some decently dense topics on the finance side. So feel free to interrupt me at any point with questions. Please do give specific examples from your farm because I feel like that helps other people learn, you know, kind of based off your situation. And like there's no such thing as a stupid question when it comes to this stuff because it is so just separate from what it takes to be a good farmer. So while this is loading, just quick show of hands. Who? Well, now I'm right. Whose books look like this? So you got a box of receipts. Maybe you have like an Excel file. It's not really updated. Or you got one brace hole who gets this. On the other side of the spectrum, whose books are perfectly clean? They're updated every month. You know exactly where your farm stands. No one. So everyone else might be somewhere kind of in the middle. You know the basics, but you know maybe there's some. Let me make sure it's not mine. Oh, it's not my head. Well, there's no shame in this. Like I said, to be a good farmer is not necessarily to be a good bookkeeper. It's very rules-based. Not a lot of like intuition that goes into it. Yeah, very different from being a farmer. So, first things first. When it comes to setting up books, there's a few different ways to do it. So, there's the old-fashioned paper ledgers you can get from the feed stores. Anyone using these? Literally a giant notebook with a bunch of boxes on it. Honestly, these are kind of falling out of fashion. They are very cheap, which is great, but it's very error-prone if you do all the math yourself. Then, you know, we have our modern version of the paper ledgers, which are the spreadsheets. These are also, you know, free or very cheap. And the spreadsheet can do some of the math for you, but you still have to like enter all the numbers yourself. And so again, it can be a little bit error-prone, but if your business is simpler, this can be a great place to start. Anyone using spreadsheets today? Spreadsheets, great. And then we've got the full-on accounting software, so QuickBooks, Xero, Ambrook, FarmRaise, there's a bunch of these out there. Anyone using any of these? I hope you would. So as your business grows, these really do become worth the money. You do have to pay a monthly subscription for them, but they will do a lot of the work of the accounting for you. They'll pull all the transactions into your bank account so you don't have to type everything in. They prevent errors, asterisks, because some of these do better than others at like guiding you through the process, making sure you don't mess it up. But they do have a significant learning curve. QuickBooks in particular is a little bit user hostile. It is really designed for accountants and not necessarily business owners. We recommend Zero as something that's like a little bit easier and friendlier to set up. And then the farm-specific softwares can be pretty good too. So, just kind of think about what your farm's context is like. When it comes to setting up finances, does everyone have a separate farm business account versus their personal checking account? If you don't have one of those, go set one up right after this. It makes a huge difference in as far as how easy it is to track stuff. Because that way, anything that's going through the farm accounts, that's a farm expense. You don't forget about it at tax time because it's already in the spot where it's supposed to be. And then, on the flip side, when you're trying to figure out is the farm making money or not, you don't have to pull out all your personal stuff. Now, obviously, some stuff will, if you go occasionally pull out the raw card for something that's totally fine. You can always go back into the system and take the transaction out or put it back in. But that makes a huge difference. How are y'all selling today? Is it direct to customer? Is it through co-op, wholesale? Is that? Okay, nice. If you are selling direct to customer, try to minimize your number of sales channels. I know it can be really tempting to take Cash App from one person and Venmo from another and have a Square reader for the farmer's market, but the more of these things you add, the more complexity you're adding to yourself each month. You can really feed everyone through Square or QuickBooks invoicing or whatever one works best for you. It just makes it way easier for yourself. Every month you'll need to take all of your expenses and put them into categories. Figure out a category system that works for you. If you need a place to start, we're going to talk about this thing called Schedule F a lot, which is the tax form farmers have to fill out. It already lists out a bunch of different farm categories. And so again, we recommend using Schedule F as a place to start. You can always add more categories or make things more specific later. Or, if I grow vegetables and there's this feed line, I don't need a feed category because I don't have livestock. If you just Google IRS Schedule F, it'll come up with this. And that can be a really good place to start. Keep track of sales by product. So again, if you're selling direct to customer and you grow a lot of different things, try to keep track in the sales software how many, like tomatoes versus squashes you're selling. So that way at the end of the year, you can tally it up and see how much you made from what. But it does require you to enter that detail ahead of time. Have your loan schedules on hand. So we'll talk about loans quite a few times here. There's a few special things you have to do with loans. If you've got, your loan paperwork right there for you, just makes it a lot easier. And then checks. We as bookkeepers don't like checks because they come in through the system as just, check 1, 2, 3 for $1,000 and we don't know what they're for. Versus if you use a debit card, it'll say like, oh, this person, went to Tractor Supply and spent $1,000, which makes it a lot easier for us. So if you do write checks, try to save them for important purchases, and definitely make sure you write detailed memos on them. We have a customer we worked with, she writes like 50 checks a month and she doesn't put memos on any of them, and so at the end of the year, it's always a huge nightmare to go back through and be like, all right, I wrote a check to Dora last June, I didn't write what it was for. What was it for? Try to remember. So do yourself a favor there. So if you go to set up, an accounting software, there's going to be these 5 types of accounts on your chart of accounts, which is a fancy accounting term for just categories. So revenue, this is the easiest. These are your farm sales. If you do some farm consulting or harvest a neighbor's field or something like that, services payments go in. If you rent out any land, that money would come in. If you get any government grants or any government payouts, that goes in there too. So that one is pretty easy. Similarly, expenses. So this is, the day-to-day cost of running your business. And they generally, there's 2 big types of expenses. This does not matter too much in your day-to-day bookkeeping, but sometimes your bank wants to see this. So COGS means cost of goods sold, and you can think of this as what do I need to produce 1 more unit of the thing I am growing? So if I'm growing 1 more pound of tomatoes, I need a little bit more tomato seeds, a little bit more fertilizer, a little bit more water maybe, and 1 more box to put the tomatoes in once I harvest them. And then operating expenses are the general farm expenses. So, my farm insurance bill, that doesn't really change that much depending on like how many pounds of tomatoes I grow. Or if I, pay rent for my land, that doesn't really change if I grow like 1 extra pound of tomatoes. Obviously, if I grow, twice as many tomatoes, some of these things will change over time, but these don't matter as much. So again, this is kind of accounting speak, but if your bank or anyone else ever asks for this, that's kind of what it means. And don't stress too much about like which, type of expense goes into which of these categories. Just do what makes sense to your own head. So like farm labor is one where sometimes people like to put it in costs because like I gotta pay someone to like harvest the extra pound of tomatoes. Sometimes people like to put it in the operating expense of like, hey, I pay this person to be here every day no matter what we're harvesting. So again, just whatever makes the most sense to you, just pick a system. So these first two, if you are thinking about a place to start, you just start with your revenue and your expenses. These other 3 accounts, don't worry about too much. You can ask an accountant about them at the end of the year. They require less day-to-day upkeep. But like, hey, I went to Tractor Supply and what did I buy? Way better than your accountant does. So if you can do the categorization for this kind of stuff, it makes a big difference. These are also the things that go into calculating your income or profit. They mean the same thing. And obviously you pay taxes every year on your income. So these are the 2 categories you need to calculate your income. Any questions on these before we get into the more complicated ones? And I see y'all are taking a lot of pictures. I can also send these slides to Karen to send out to all y'all so that you have them. That might make it easier. Okay, so assets. So this is the stuff that helps you produce things on your farm. So your land, your tractors, if you raise livestock, your breeding stock. It also includes stuff like if you have cash in your checking accounts, or if you have inventory on hand for stuff. Generally, the threshold for when it's an asset versus just an expense is if you spend more than $2,500 on it. So, like if you have some goats and they bust through your fence and you got to patch the fence and you buy $100 worth of fence, then that's just an expense. But if you're building like a whole new pasture and you get like $10,000 worth of fencing, that probably goes into the asset category. So again, these are the things that add value to your business. I'll talk about something called depreciation later, but assets, this is what goes into depreciation. For Form 4562, which is another thing that most farmers have to file with their taxes. Okay, then liabilities, this is what is money I'm gonna have to pay in the future. So this is your loans, and then sometimes again, if you go to the bank, they will ask you how much in taxes are you gonna have to pay over the next 12 months? How much are you gonna have to pay your workers in the next 12 months? Basically, just if you're thinking about what to put on your books, just put the loans. But again, sometimes your bank will ask for it. And then equity. This is basically just assets minus liability equals equity, which is how much is your farm or your business worth. So if you buy $1 million worth of land and then you get $1 million mortgage, you don't actually own any of that land. The bank owns the land, so your equity is 0. But then once you pay off your $1 million mortgage, now you have $1 million worth of land, and so the $1 million would be your equity. Also, we talked about personal expenses. If personal expenses ever get on the books, you can always just put them in an equity category. It's kind of like, if the business has $1,000 and then $100 is accidentally your grocery bill that you put on the farm books, well then the farm really has $900. So that's kind of how you think about that. So again, these ones are more complicated. Again, if you're just starting out, just start with the revenue and expenses. Make a note that these things get accounts to help you at the end of the year, or like a small business development center or farm extension can help tally these things up as well, but they are definitely more complicated. So, any questions so far?
Anyway, any sort of thing. So, in terms of the
Yeah. So generally, the IRS cares about stuff that is new to you. Irregardless of how old it actually is. Now, if it's, you know, $1,000 clunker, then, you know, you can, it's under that $2,500 threshold, so just expense it. But if it's more than that, you probably should list it as an asset. Now, Dora's gonna be talking about some changes in the tax bill where you probably can expense it anyways. And then the other funny thing about vehicles and machinery, the IRS has like guidelines on how long they think something should last, and their like how long it should last doesn't actually make sense in reality. So for example, they say any new vehicles you buy should be depreciated over 5 years, but any used vehicles you buy should be depreciated over 7 years. I know, it doesn't make any sense. It's just what the IRS says, so we go with it. So one other thing for your books when you're tracking assets, we usually recommend putting like what the IRS says in your actual books, even though the value of that might not match what it's actually worth. So if you buy a tractor and after 5 years you've fully depreciated it and the IRS thinks it's worth $0, you obviously still have a perfectly good used tractor and you might be able to sell it to someone for like 50 grand. So in your books, it might be helpful to have the $0 to keep track for tax time. But again, if you go to the bank for a loan, they'll ask you about your assets and you should probably put like, hey, this tractor is actually worth like $50,000. Ignore what the IRS says. So yes, the IRS intentionally makes things confusing around things like that. That was probably a longer answer to your question. Yeah. And I'll share my email address at the end of this too. Feel free to have him reach out with any additional questions. I am also not the CPA on our team, so it's possible y'all will have questions that I can't exactly answer. I know enough to be dangerous, but I'm not the one like actually hitting file on our tax forms for our folks. So one other layer of complexity as your farm business grows to be aware of is some folks like to track their different farm enterprises. So you can define this in a lot of different ways. So if you're growing many different things, you can say like, okay, I want to track my beef business versus my pork business versus my chicken business. You might want to say like, I want to track the co-op stuff versus what I sell to a customer. You know, you might have like the farm, but then also like side consulting. You might want to track that separately. In QuickBooks and Xero, they give you an option to put both a category, which will be the what, and then also an enterprise. You know, we have beef, pork, chicken in this example. So this is what it looks like in Xero, and then in QuickBooks, you see something called classes, which will do the same thing. So again, this is just something to be aware of that it exists. It is out there. As your business grows, you might find that useful. But I would say most folks don't start tracking that until they're like over $1 million in sales, and then it maybe starts. As far as how to do this, like please do this monthly. It is much easier to remember what expenses and sales were, 15 days later rather than 9 months later. Pick the ugly weather days. Find an accountability buddy, or hire a bookkeeper, someone like us, or to do it for you. Keep up with it. That's the most important thing. Just even if you don't want to like enter it into the software, you can just keep a list of like what everything was. It makes, or just like jot a note on a receipt before you put it in the box. It makes it so much easier. If you need our help, we do bookkeeping for farmers. It starts at $75 a month, so we're really affordable. And then as your business gets bigger and more complicated, we can handle that complexity as well, and prices kind of go up from there. Okay, so now we're going to go through, if you remember each of those 5 categories, so revenue, expenses, assets, liabilities, equity, we're going to go through and just say, like, each month, what do you actually need to do? So sales, there's actually a few options here. They are all totally valid. It just depends on what fits for your business. The easiest one is just to say, like, any deposits you get, those are sales. I put them in the sales category. I don't care whether the sales came from the co-op or from the farmer's market or from an e-commerce platform or whatever. And so again, if you don't need that much data from your business, like, this is great. If if you're using invoices, you can actually match the invoices to the payments. And so again, if you're using like a digital invoicing software, this also helps you keep track of who's paid. Now, if you're doing this in QuickBooks, just be careful. It is really easy to double count the revenue in QuickBooks. You would think that QuickBooks invoicing would talk nicely to QuickBooks, the accounting software, but it doesn't. So just be careful with that. You don't want to like double count your revenue and then have to pay more taxes on it. If you're using an e-commerce platform, so like Square, similarly, you can match like the sales from that day with payout they gave you. Most of the accounting software have integrations that'll help you do this. And then you can also, export reports from platforms and match it manually. This is a little bit more time consuming, but it does work as well. So you can see here, option one, this is the deposit. I put it in a sales category. I'm done. I'm good to go. Option number two, if I'm matching an invoice, the invoice payment will come through, and then the accounting software will say, like, hey, this looks a lot like the invoice for $400 you sent to someone. Is this that payment? And you can say, yes, that is what that is. And hit the match button, and then you're good to go. And then similarly, e-commerce data, if you get a payout, from Square for $48, it'll say, hey, you sold $48 worth of something yesterday, so this is the payout for this. And again, you say, yes, I want to match that, and you're good to go. Okay, on the expenses side, this is also really easy. You just put everything into whatever category makes sense to you. The only thing to be aware of is loan payments. Loan payments are secretly two different things. The interest half of the loan payment is an expense. You can put that on your Schedule F. You can take it off of your taxes, so we definitely want to count that. And so just know that it'll go into an interest expense category. You'll have to what's called split the transaction. So, it comes in from your bank feed as like loan payment to, AGCO for $1,000. And you'll have to say, no, this was secretly, this was secretly $150 worth of interest and $900 paying down the principal. The principal goes into that liability account of, that loan you owe. And this is how it like pays down how much you owe on the loan. So again, just be aware, this is basically the only special thing on the expenses side to be aware of. That's a little bit trickier. Assets. So this is where it gets more interesting. Again, on a month-to-month basis, mostly just separating out principal and interest. When you buy something expensive, you should probably create a new asset for it in your books.
is quality journal entry. Be careful, like you can see 0 even gives the warning up top of like, please tread carefully with these things. They are very powerful, but you can also mess up your books. So yeah, this might be a good one to just tell your accountant at the end of the year, like, hey, I got this tractor, but I also got this loan, can you help me sort this out? And here's what the loan schedules look like. And so you can see as you pay off the loan and pay that principal down, then the amount of equity that shows up in your books goes up. Now you own more and more of the tractor. Okay, liabilities. This one is also decently easy. Again, it's just the loans, you probably have to put it with the journal entries, so just be careful with that. And then you got to split out your principal versus again, sometimes the bank will ask for something called current liabilities, where you might see in the accounting software there's a category called current liabilities. And so this is the stuff like taxes you might owe in the next 12 months. You don't have to fill this out. So you just kind of ignore that. Once your business gets like really big and complicated and you're paying like tens of thousands of dollars of payroll every month, maybe you want to track that, but most people just doesn't matter. And then equity, really the only thing you have to do here is if you have a personal expense that accidentally made it on the farm books, we want to mark that as a personal expense. And then if you put money into the farm or take money out of the farm, we want to mark that as an owner investment or distribution. And these are equity accounts that affect, how much equity or value is in the business overall. So this category is mostly, it calculates itself, but those are the things where you would need to do it on a monthly basis. Okay. One note, I've been talking about bank transactions a lot. There are farm expenses that might not necessarily show up on your bank statements, so you might have to add them in manually. So like, if you do anything in cash, if you have like a farm vehicle and you have mileage that you need to add in, obviously like your car is not sending a bill to the bank and say like, hey, I drove 200 miles, can you send me my mileage expense? That's not how it works. How many people live on the farm? Okay, so most of y'all. So if there's any like half personal, half farm expenses, like maybe you only get one power bill for both the farm and the house, you might have to split that each month and say, okay, I'm gonna, say it's 50-50, or the farm uses way more power than my house does, so I'm gonna put most of that on the farm's books. So just make sure, and those are all taxable deductions, so you want to make sure those are on the farm books. And then anything you accidentally bought on your personal account, make sure you put it back on the farm's books, so you don't lose that deduction. Okay, any questions on the bookkeeping stuff? How are you feeling? Okay, got some nods. So I'm going to go over financial statements, which is otherwise known as like why you bothered to do all this record keeping in the first place. So this first one, so there's three main ones. The first is a profit and loss statement, otherwise known as an income statement. Those words are interchangeable, they mean the same thing. It is how much profit did your farm make? So we've got our revenues, we've got our first type of expenses and cost of goods sold, we've got our operating expenses, and we all add all that up and we get our net profit. Just want to highlight, there's three kinds of profit that show up here. The only one that really matters is gross profit. So this is how much did I sell versus how much did it cost for me to produce that stuff directly. So here this is an example of like a livestock farmer. So most of their cost is feed. And if gross profit is ever less than 0, that is a 5-alarm fire, because it means it is costing you more to produce the thing than you are selling, and the more you produce of the thing, the more money you are losing. So you always want this to be like nicely positive, and then obviously we want net profit to be positive too, but there can be more that goes with that. Cash flow statement. So this is these. Yes.
I have a question. Why would you put the cost of goods sold in with the income instead of the expense?
So the way this is set up is probably not explaining it very well. So you take the revenue, which is 90,000, and then you subtract out the cost of goods sold, which is the 25, to get the gross profit of like 65.
Right.
So that's the math that's happening there, and then that gives you a little checkpoint down your expenses, just like how are you doing from a gross profit, like the cost to produce the stuff, and then you put all the OpEx to get your operating profit, which shows like you can kind of think of this as like, am I producing enough to cover the cost of having the farm?
You know, what I'm asking you is like, on the schedule F, it has seeds as an expense.
Yes.
But here you've got seeds as a cost of goods. So
Yes.
what determines when you put it under cost of goods versus expense?
So to be clear, these are both types of expenses. And they will appear on your Schedule F all clumped together. So this is really just like what makes sense to you as the business owner in terms of what directly goes into what you're producing versus what's kind of a general farm expense. So people will put different things in different categories depending on their business and what makes sense to them. So like, again, I think labor is the most common one, where a lot of times it'll be in cost of goods sold, a lot of times it'll be in OpEx, it just depends. Or like fuel can be one that sometimes you put that in cost of goods sold, especially if you're doing like some trucking and stuff on the side. Again, it just depends what makes sense for your farm. Or like if you're growing indoors, utilities might be something that you think is a direct cost, because like the more stuff I'm growing indoors, the more, you know, power I need for that. So yeah, this part is not an exact science, like which goes where. As long as everything ends up somewhere, that's really what matters. Cash flow statement. So who's ever been in the situation of like the farm is profitable, but somehow you're still like bank account feels very low? Should be everybody's had years like that. And so this shows like how much money is in the bank account. So you can see net profit is part of it, but it's not the whole story. Especially if you're making investments into equipment or infrastructure or whatever, that can take up a lot of cash, even though it doesn't show up on your profit and loss statement. And then like if you get a loan or have to pay back a loan, that's another thing that will show up here. And then the balance sheet, this is just how much is the farm business worth. This is what your bank cares about. So you've got all your assets over here, all your liabilities over here, and then assets minus liabilities. Any questions on financial statements? I mean, we're probably getting like more than y'all bargained for today. Anyone need more coffee? And then there are like ratios out there, balance sheet ratios that can just give you an idea of like how financially resilient your farm is. The University of Minnesota has really good farm benchmarks, so that's what we use. Again, like having a number that's red doesn't necessarily mean it's bad, especially if you're like a newer farm business that's getting off the ground. But just kind of gives you an idea of where you stand. All right, so now, you know, you got your books, you know exactly how much you spent on what, and now it's tax time, and you gotta actually fill all these forms. What do you do? So first off, just deadlines to know. So January 15th was the estimated tax deadline. February 2nd was the deadline to send out 1099s and W-2s. If you haven't done these things yet, it's okay, just do them as soon as possible. If your farm is an S corporation or it's a nonprofit, your deadline is March 16th. Everybody else is March 15th, or sorry, April 15th. So still got some time, but you know, we're sort of cutting it close now. Most farms are structured as LLCs, so I'm going to kind of talk about this from an LLC perspective. But again, if you have questions about like how should I structure it from a legal entity perspective, are you going to cover any of that?
I'm sorry.
Are you going to cover any of the like LLC versus S corp? Okay, so she'll cover that. But the main tax forms to know. So Form 1040, this is what you as the individual have to fill out. So like if you have any W-2 income or whatever, that'll show up here. Schedule F, this is your profit and loss from farming. If you go to a CPA and they try to fill out Schedule C for your farm, please go find a good ag CPA, because this is not for farms. Schedule F is for farms. Schedule C is for other businesses. We see this a lot. It causes a lot of problems. But if you do have another farm business, so you do like agritourism or value-added products, you may have to fill out Schedule C. And then Form 4562, this is where you keep track of all your depreciation. So Schedule F, we talked about we mentioned this earlier, I'm gonna go through some of these line items. Generally, most of your farm sales are gonna go on line 2. This is sales of anything you raised. Line 1 is sales of anything that was not born or raised on your farm. So if you bought a stock or cattle and resold it at the end of the year, that would go to line 1. If you bought eggs from your neighbor to sell at the farmer's market, that would go to line 1. But those stuff will go to line 2. And then the rest of these lines are basically like, if you get special form 1099s from like your co-op or USDA, you'll put that there. It'll tell you which line to put it in. And then custom hire, so if you harvest your neighbor's field, that'll go in line 7. And then line 8 is basically everything else. So like my neighbor paid me for some consulting, or I got a grant from a local nonprofit. You have to put grants on here. I'm sorry, it is taxable income. It sucks, but it is what it is. And then you add it all up on line 9. And then the expenses side, this should be really easy if you've been keeping good books, because you can say like, okay, this year I had $17,000 worth of feed costs. I just put in the $17,000, and then anything that doesn't fit this Schedule F categories will go over on lines 32. So yeah, you just add that all up, subtract that from your farm income. It gives you your farm net profit, and you just put that there, and then you should be good to go. Form 4562 gets a little bit more complicated. So because the government likes to give tax breaks to farmers, there's a bazillion different ways that you can do your depreciation. I'm not going to focus on the bazillion different ways. If you have a lot of assets, it's probably worth the money to talk to a CPA to optimize this. But if you are doing it yourself, the easiest method, you will not get in trouble for it, is straight line depreciation, which says you take an equal amount each year. So again, if you have a $10,000 thing, if you have a $10,000, new tractor, you depreciate that over 5 years, so that's $2,000. The only tricky part is this convention, which is basically the IRS like, when during the year did you buy this thing? And you can always use half year, just like, hey, IRS, I bought it exactly on July 1st, halfway through the year. And so IRS is like, okay, cool. For the first year, instead of taking the $2,000, you're only going to take half of that. So it'll just be $1,000 the first year, and then you'll do the $2,000, $2,000, $2,000, $2,000, and then that final $1,000 will just be that last half in like the 6th year, whatever the math is. So we have a little calculator that helps with this. Like I said, if you have a lot of things to depreciate, the IRS gives you a lot of options to maximize your deductions, so it's probably worth talking to CPA. And then we mentioned the IRS lengths of life do not make sense, but this is what they say to use, so we go with it. Vehicles, so we already mentioned this. There are 2 ways to track vehicle expenses. You have to pick one. So you can either do mileage, which is I drove the truck, 10,000 miles for farm purposes, and then the IRS says, okay, you can have 70 cents per mile as a mileage expense, so you can take $7,000 for that farm trip. Or you can track all the actual expenses, so all the gas, all the repairs, the depreciation, et cetera, and add that up and do that instead. You can't do both, unfortunately. In general, if you have a newer vehicle, tracking actual expenses will get you a bigger deduction. If you have an older vehicle, mileage will get you a bigger deduction, but you can't switch from actual to mileage. You can go the other way around, so just be aware of that. Estimated taxes, everyone aware of these? Okay, we got one hand here, yes.
Strictly, does that go to the election or
That's a great question. So if it's strictly for farm use, again, so actually you can only do actual expenses if it's strictly for farm use. If it is a half farm, half personal, the IRS is going to want you to use mileage, which did not answer your question. Let me answer your question. So you are supposed to depreciate farm trucks. In reality, there's a lot of ways we can just deduct the whole cost of the truck in the first year. So again, if you bought a new truck, probably worth talking to a CPA about the optimal way to do it for that year. Estimated taxes, the IRS wants you to pay your taxes along away, not just once a year. Luckily, if you are a farmer, you do not have to pay quarterly. You can just pay once a year. But you are supposed to pay by January 15th. If you don't know what to pay by January 15th, you can pay on March 2nd, but you have to like do your full filing at that point. So estimated tax is not, I have to fill out the forms. This is purely like the IRS wants a check. So you should send the IRS a check by January 15th each year. If you file your taxes by March 2nd and mail the IRS a check, they are okay that you didn't send the check by January 15th. If you wait until April 15th to file, technically the IRS already wanted their check. It is what it is at this point if you haven't done it for this year, but for next year, just remember that. Again, the IRS wants their check earlier. If you're like, how do I know what to pay? Here are the safe amounts to pay. So let's say, so 2024, a year and a half ago, you already filed these taxes, and it said, here's how much tax you had to pay for 2024. For your estimated tax for 2025, you could say, all right, I can just send the IRS the same amount, and they'll be fine with that. Unless your adjusted gross income, which is basically like how much profit you made that the IRS is going to tax you on, was more than $150,000, in which case they want you to send them a check for 110%. So again, just keep this in mind for next year because we're obviously past the deadlines for this year. IRS is probably not going to come after you because they've had layoffs and there's not many people doing audits as there were. But for next year, it's just better to do this ahead of time. And then obviously, if you're unprofitable, you don't owe any taxes, so it's fine. Yeah. How am I doing on time? Okay, cool. Okay. We got 60 more seconds to cover a bunch of stuff. State income taxes, Georgia makes this really easy. It's just another fraction of your federal income tax, so you do them both at the same time. Sales taxes, everyone have a gate card? Okay, everyone's got a gate card. If you don't have a gate card, go get a gate card. It means you don't have to pay sales tax on anything you buy for your farm. It's awesome. It is one of the best states, out of all the states that support agriculture, Georgia's program is one of the easiest to deal with. It's great. Sales tax on your farm products. So generally, unfortunately, each county has its own rules. So every single county in Georgia, except for one, says if you sell any raw farm products, you don't have to collect sales tax from your customer. If you sell anything in DeKalb County is the one place that does charge sales taxes. I don't know why, it just is what it is. If you use like an e-commerce platform, it'll help you keep track of this. If you sell value-added products, generally do have to collect sales tax. And then you may have to file regularly, even if you don't owe any sales tax. So like, we are a services company, we just do bookkeeping, we don't sell anything, but the board still makes us go in here once a quarter and say like, yes, we still do not sell anything, we still don't owe any sales tax, but we filled out this thing for you. So just be aware that you might have to do this even if you're not selling or owing sales tax. And then technically there's this thing called use tax, where if you buy something in another state, so if you like go to Alabama to buy a tractor and bring it back here, Georgia still wants its sales tax on the tractor you bought in Alabama. In reality, this is not really enforced that much, but technically you do owe it, so just do with that information what you will. Property taxes, does everyone have their homestead and ag or conservation exemptions? If you don't, just be aware that the deadlines for these things for this year are coming up. So like I know the homestead one is April 15th, but this can save you a lot of money on property tax. Okay, so lots of tools and resources out there. I will share my name here. So there's my email address, there's my phone number. We can give you a discount if you mention this group. We can do your books, we can file your taxes for you. Like I said, the bookkeeping starts at $75 a month and the tax filing starts at $400. So yeah, that is us. And any other questions? I know that was a lot of content and I talked really fast.
And you say you're gonna send the slides to?
Yes, I'll send the slides in.
So the work that you do, that has to go also.
Yes, definitely counts us as one of your farm expenses. So yeah, actually that's Schedule F. It has a line item for, I think they do. Maybe not. Yeah, so usually we'll create a separate category for like accounting and legal expenses, and that's where we would go. Or you, I guess you could put us, we're not really labor, you don't have to send us a 1099. Yeah, so I guess I would just put like an accounting and legal category, use that for us.
Can you go back to your contract?
Yes. Cool, well, any other questions you have, that you think of in the next few minutes, you can ask Laura instead.
No?
Just kidding. And I'll be here through lunch too. Feel free to find me.
Breaking news.
Thank you.
Well, thank y'all so much. Thomas, I'm moving, we're gonna take a short break. I do have some food in there, because just getting here, I have to work. Do not order anything from. I am gonna say that, Instacart, because Instacart is horrible. I paid them in advance, then they told me they didn't have my order. So I didn't know it's a secondary company that comes into the store and shop for you. But they come in when they get ready and shop, not based on the timeline you get them. And then when you call the company, they had no idea that I had no. So it's that problem.
That's good.
going through, and she is tax master 2020 and LLC, and she is really smart in that she knows taxes. And my baby knows she knows taxes. She wants to work for Miss Dora. So when I asked her something, she said, just ask me Dora. So like this year, I'm really, I mean, this tax thing, y'all, you know, they come back on you later in life. I got audited last year.
Oh, no.
And but it's all okay. And it was really my fault, but I haven't had to do anything because I keep stating my case and returning saying I don't agree. I probably have interest through the walls by the time I finish. But I have learned, I have done taxes myself ever since I was 18. I always did taxes. I think that's a great thing. And for me, I do it for elderly people and young people who really don't have a lot of money. And I try to do something to give back. But Ms. Dora is really talented in her field. She's talented in every way. She is an author. She has written now, as I know now, 2 books. And she'll tell you a little bit about herself a little more. But like I said, she's a phenomenal woman, and she is from Albany, Georgia, by way of Hawkinsville. So she's from a small town, but she's got a lot to tell you. She's really, really great. So at this time, Ms. Dora, I'm gonna turn it over to you in your own way. Thank you.
Good morning, good morning, good morning.
Good morning. Good to see you all this morning. And so I want to start by first telling you all a little bit about what I do. And other than being a tax professional for more than 20 years, I have a background of nursing as a career. I did 26 years as a nurse. Also, I have my farm called J. Ponderosa. So my husband loved the cart racing. And so my last name is Jefferson, so it's actually Jefferson Ponderosa. And so we have a 20-acre farm, small farm like most of you all. And what we do out there, we've done a multitude of things from pecans to cattle, to chickens, to fish, and right now we're doing goats. I say we because I'm accustomed. I was married to my husband for 12 years, but he passed away last year in April. And so I'm accustomed to saying we, so, but I'm still saying we. Okay, so also like Ms. Lawrence said, I do a multitude of things. I also have a nonprofit, and a nonprofit is we have to have a core group of people that we serve. And so, since I was a grandparent that raised my grandchildren, I thought that it would be fitting to serve that group of people. So what we do is once a month, we give away a food box. And we can give it to anybody, but that's the people that we try to reach out to supply them with nutritious food for meals, meat, canned goods, all that stuff. And we do it every Friday, the last Friday of every month. And anybody's welcome to volunteer. And so my cards are here on the table and my address is on the card, and that's where we distribute the food at. And so once or twice a year we have a big event. So we do a back to school bash along with Albany State, and we give the children socks, t-shirts, and underwear. And we do the same thing at Christmas. And at Christmas time we also add a toy, and we give them the socks, the t-shirts, and the underwear. But I'll stop right there because I'll be up here all day talking about me. So I know you all want to hear about these taxes. So I've been doing taxes for over 20-something years. And what I know that what everybody wants to know about is what is all in this big, beautiful bill for farmers. Well, I can tell you that the gentleman from Congressman Bishop's office, he went through it, and that's all that it is. It's not very much that's going to make a difference for you all, because like the gentleman spoke and said, there's nothing for the small farm. Every time they pass down some money, every time there's something available, we are the forgotten crew. So when we had like Hurricane Michael to come through in 2018, and you know, it just tore up Albany. Well, it came right past my house. And so my pecan orchard got ripped up. But you get, this is what they told me. They counted the root balls because they rooted up the tree
in my pecan. I had about 50-something pecan trees, and I didn't have enough rooted up for me to get any money. Then he went out and he checked the debris. He said I didn't have enough limbs on the ground. And so there was a cutoff. If I didn't have at least $2,000 worth of damage, there was nothing for me. So I do understand, and I do feel that we need to speak up on some level about the small farmer as to why is it that we never get anything. You know, they don't ever put that in these bills to help us to sustain. So they talk, they get all the grant money and they talk about sustainability, but then yeah, you give us education, information, but we need help in implementation. We need to be able to, you need to give us something to plant the seed. But see, everything to me is like in reverse. They give you the seed, but you gotta pay for the seeds and then get reimbursed. How is that helping us? They don't want to give us anything up front. And so, yeah, we want to be a voice at some time. And so if anybody get an answer to that, please let me know. So now I'm going to talk about the big, beautiful bill here. All right, let me make sure I can. All right, so y'all see it up there? Okay, the overview of the bill. Much of the agricultural contents represent part of what would normally be covered in a traditional farm bill. Extensions of key farm programs. That's one of the things that they have in the big, beautiful bill, and we'll go over what that means in a minute. Updates to price support systems, adjustments to crop insurance programs, and tax provisions affecting agricultural operations. Yeah, I wanted to go back here. To support. Update to price supporting. The new farm support program, what that means is that it helps protect farmers from unpredictable markets and weather conditions. So I know that they had something in place, and what do we call it? The crop insurance, the NAP, the NAP insurance, whenever you have a loss or you take your yield to be sold, and then if you didn't yield what the average yield was for the year, then they would then give you an adjustment, and that's where you would get the additional check, the indemnity. And so what they're saying here is that they implemented additional, they lowered the requirements to be able to get that money. So it's called price loss coverage. And this helps farmers when commodity price fall below a set level, the national average. And then they will give you the difference of what the national average was for in the form of a stimulus type check. And they provide payments when crop prices drop too low. So the price loss coverage is one of the new support programs that we implemented under the big, beautiful bill. They also implemented agricultural risk coverage. That's the insurance itself to protect farmers when the revenues drop due to price decline or reduced yield. Same thing, focuses on revenue protection and market fluctuation. So we know that, you know, we have weather that's crazy, and sometimes you may have a drought, sometimes you may have flooding, sometimes you may have, if you have a farm with animals, you may have the animals to perish because of the drought or because of flooding or because of some of his natural causes. But these monies will pay you for the cost of those cattle. They don't pay you the full amount, but you have to report your animal's death in order to take advantage of receiving this insurance. So when they modify the changes to the government farm support plan is the update of the crop insurance, which is making it cheaper for you all to get crop insurance. And then as far as I know, you don't have to pay up front. And so if anybody has experienced that, after you grow your crop and after you turn in your yield, and then the crop insurance guy comes out and then he compares the national average, he might write off your whole field and say that it did produce, and then you would get paid accordingly. And so the new and modified tax incentives, we're going to go over that in just a minute too. So let's see. So the strong farm safety net that the Congressman Bishop Representative Mr. Drake spoke on, and price support. the price support programs is supposed to be improved, and just what I just said, and assistance when commodity prices drop, and greater financial stability during this season. I got ahead of myself, I think, and then protect against market volatility. All right, more affordable and accessible crop insurance. This again just points to the premium being lower for small producers. Expanding the program access, they're giving bigger access availability to small farmers and more flexible coverage options and protection against weather risks. So when they say more affordable and accessible crop insurance, it's pretty much the same stuff that we already had, and I really didn't see a whole lot of change that they implemented, but what they're saying is that, yeah, what I already said, the protection from drought, floods, storms, disease, or crop failure. And so, but you have to report your crop in, and they have a deadline to your agency, your FSA, or USDA agency. Whatever you plant, you have to tell them how much you plant, and then after that, you have to tell them how much you yield. And if you didn't yield anything, then you tell them. And then what happens is, then the farm, if you have enough acreage, if you fall within the perimeters of that coverage, if you plant the crops that are eligible for coverage, then they will come out and they will look at your farm, and then they will make a decision whether or not you'll get some compensation. Okay. Impacts on planning and business structure. So we need to focus on how we plan to make money on our farms. Everybody farms, and it is a business. Farming is a business. But how do you make money out of that business? You have to have a plan, because if we fail to plan, we plan to fail. And so in planning, you need to know before you grow. That's what I tell everybody, know before you grow. So in 2020, I grew hemp, and we had 20,000 pounds of hemp. So hemp is the product that produces CBD. So it's the first cousin to marijuana. And so when they became legal in the state of Georgia, we grew 5 acres of hemp. And we produced, like I said, 20,000 pounds of wet product. And then we had to take it to be dried out and to be processed. But that's another story. But the reason I say that you need to know before you grow what you're growing for and who's going to buy your product. So there's no need of planting tomatoes and you got the best tomatoes in the South if you don't have in plan for somebody to pick those tomatoes, for those tomatoes to get in a place to stay so that they don't perish, and then someone to buy them. So these are the things in planning that we need to have in place, but I see so many people say, oh, I'm gonna plant some soybean, I'm gonna plant some cotton, I'm gonna cause the price is this and I can get this and this, but have they planned, who are they gonna sell it to? How are they gonna get it out of the field? How much money do you expect to make once you do your acreage yield? How do you know that you're gonna come out in the positive? So you can't just jump on doing something on the farm and expect it all to come together later. You have to plan before you actually get into doing anything, because you fail to plan, you plan to fail. And so the impact on planning and business structure is, I wanted to make sure that I touched on the structures of business. And so now we know that farming is a business. And so just like trucking is a business. And so when you have a business, you have to structure it as so. So with structuring your business, we all mostly are aware of one structure is a sole proprietor. That's when you just are the owner. There's no registration needed for a sole proprietor. You're just in business and you're doing business and you're filing your taxes and such. The next one is the LLC. An LLC is in place when there's one owner, and it's mainly structured to protect your assets. So say you had two businesses going. You've got a trucking business and you got a farm. And the trucking business has an accident. And the accident, you're getting sued. So now the trucking business is an LLC and the farm is an LLC. If you don't have that LLC protection for your farm, then what can happen is the insurance you've got on the truck, they can take that. But then now it's called piercing the corporate veil. They can also come over and get your farm if it's not protected under the LLC. So if your farm is just you as a sole proprietor and your truck is an LLC, or if you're doing both of the sole proprietor, then you have yourself open to liability for anything that trucking company does that cause harm and you get sued, then they can come and take your farm, your assets, your liability. So the LLC is there for, it's called a limited liability corporation, and basically that is to protect you and your assets. The other entities of the LLP, so it's more than one person, they partnerships, and then you move on to the chapters, the subchapter S. And the subchapter S is when you want to, a lot of people I've talked to, they go in because they hear what the subchapter S is, but they don't know why they need it. So you don't need it until you're actually making over $50,000 taxable liability. So not that you generated $50,000, but after you finish with your expenses and all your deductions and credit, you owe $50,000 worth of tax to the government. Now that's when you go to a subchapter S, because now you got bigger opportunities to write off deductions under a subchapter S than you would under a regular LLC or a regular sole proprietorship. So you got to know when to switch gears. So when you start making money, they look at your money differently. They handle your money differently. But you got to know when that time comes to stop doing the same old thing, because then what happens is you only get a percentage of some of the expenses. And last year we had a lot of that, because this year is a whole new change of tax laws, and they're still changing tax laws every day. But last year I had a lot of clients who were really disappointed with their tax return because they were still under an LLC and they were making more money, and then but they wanted to be able to totally take off all expenses, but it doesn't allow you to do that. You can only get so many percentage of that expense. So like this year, starting when the Big Beautiful Bill came out in July, it now allows, like Alex was saying, it allows 100% of any farm equipment that you buy. If you got to buy a new truck, you can write the whole thing off, or you can depreciate it. And what I tell my people is, let's see what you need. So I call myself a tax strategist. So we look at everybody individually, and then what we do is we make a decision based on what they have as to what we think is the best course of action. So you don't just go and do it just because it's there. And that's what a lot of the Hewitt H&R Block, they give you just what you give them. And they will tell you this is what you owe. They don't look for any kind of special deductions for you, any kind of credits. They don't even advise you on what you should be doing at that time. It may be time to transition, but then you have people say, I go to H&R Block every year. But Block is just Block. They're gonna do what they say do, because we all are representatives of the IRS. We cannot alter what you have given us, but we can. Me as a personal tax professional, I want to help my people not owe the government. And I know that the tax system is designed for us to support the government. But in this Big Beautiful Bill, you see that he has already sheltered the people with all the money. And the people who have very little are the ones that don't have any incentive. So now they tell you we got these incentives, the child tax credit, what if you don't have kids? They tell you you got this incentive to earn income credit. What if your income is too high and you don't fit within the bracket? So what is there left for you? Then they tell you they got the new first home buyers credit, and that has, to me, has been the biggest sham, because the first home buyers credit was for the state. You didn't get no credit unless you owed them. So it wasn't like you got a credit added back to your tax return. It was only if you owed them, then they would offset what you owed them. So they push these words out there and tell you all of this stuff, but you need to get the facts to know before December 31st of every year. You need to be talking to a tax professional, and you need to be discussing where I am and do I need to buy something? Do I need to hold? Do I need to fold? And do I need to walk away? I do Kenny Rogers. You got to know when to hold, you got to know when to fold, and you got to know when to walk away. And in taxes, sometimes that's just what you have to do. And you have to strategically align your tax return according to your future needs. And so another thing that I look at is having a healthy return. So what is your goals for the upcoming year? Are you planning to buy anything? Are you gonna need this tax return to give to a lender to buy something? Then that's a strategy. So we have to talk about it. We have to figure out what you plan to do, because I know what a lender is gonna look for. And that's when you start depreciating your assets, because in the eyes of a lender, depreciated assets is just like money in the bank. See, we don't know that, but then they know that. So when they look at your tax return and you say you're a farmer, they looking first for that sheet that, what was the number, Alex, for the depreciation? Yeah, no, not one.
Oh, the $2,500 threshold?
Yeah, that one. But that's the first thing they look at. They look to see if you got any depreciation on that tax return. Because if you depreciated assets and then you've got $30-something thousand, and then you've got your regular tax return that says your adjusted gross income was $30,000, then in their eyes as a lender, you've got $60,000 to work with that they can loan you money on. But see, we don't know this kind of stuff. Well, I know it, but most people don't know that kind of thing for what lenders are looking for. And so mixed or negative effects for small producers. So we kind of touched on that about, the effects for the small producers. To me, I just don't see it. I don't see where there is anything that basically is going to help us. So cuts in the nutrition and social program, cuts in SNAP eligibility. Pretty sure you all have heard that, you have to have a child under 14 in your household in order to continue to receive SNAPs, or a person that's disabled. Anybody else has to be seeking a job. They have to be in some kind of job program in order to continue to get food stamps. And then they not allowing you to buy what we call junk food with food stamps. You can't buy potato chips and soda and candy with food stamps. So what does that mean for us? Does that mean that they're gonna buy more stuff from the farmer or less stuff? Does that mean they're gonna take advantage of the agricultural environment? One year I planted 4 acres of collard greens and turnips, and I put a sign up for free. I called all my family members. Do you know nobody came to get greens? Because they're too lazy. They don't want to, and even like with the food boxes, I experienced people just are lazy. They want to come and act like
They want you to pick it.
they wanted me to pick it, exactly. Exactly. And probably wanted me to cut them up and wash them too. But I said free, but they still didn't take advantage of that. So, I have a different view of what we call world hunger. We're not a starving nation because we waste so much. In my nonprofit, we go to Feeding the Valley. And Feeding the Valley is where we buy our food that we distribute, but we buy it at a discount. And so when we get the food, we're giving it to the people. Sometimes they come by there, one lady cussed me out so bad about, I didn't ask you for this, I just said you can keep this, all this. And I'm like, and everybody there volunteer they want to duke it out with the lady. I said, no. I said, my reputation is on the line. I said, we're not going to do that. Just let her go ahead. And then when her children got home and she saw the good food, it wasn't no just bunch of beans. It was real. It was meat. It was hamburger. It was hot dogs. It was buns. It was cornflakes. It was milk. When she saw all that stuff, She called me back crying and apologized. But I told him, I said, see, that could have went another way if y'all would have got down what Michelle Obama say, when they go low, you go high. We can't get with them like that. But every time we have a giveaway, you gonna have somebody that food. You know, I don't want that over there. Don't put that in my box. You got a choice. This ain't Burger King. You can't have it your way. You gotta take what's in the box, and if you don't want it, give it to somebody else. But see, that's what I say about our people, that you try to help, and then you know what is their attitude about it. And so as the government changes, these laws change, they're gonna begin to feel the crunch. And so how will we as farmers, how will that affect us? That's what we need to start thinking about. Will we be able to sell more product? Do we sell to the individual? Do we try to find stores to sell to? How will we produce income on our farms? And then every year you want to think of a little bit more. You want to add a little bit. Say you had a contract and you sold to Food Line, 3 stores here in Albany. Okay, then the next year you want to pick up a 4th store. And the next year, you want to pick up another store from somewhere else. But you're always growing, forever growing. Don't just ever be satisfied with where you are, because growth is power. And as you grow, and then we all are in this for what reason? All of y'all in here are younger than me. So I know. So I know y'all ain't doing it for your health. So what I'm saying is, the majority of us are putting it in for a legacy. We're trying to leave something for those behind. We're trying to implement while it says hit the iron while it's hot. So when it's available and the opportunity is there, because we don't know if this opportunity is going to exist in years to come. So we've got our land, we've got our families, and then we try to make the most out of it. Because let me tell you, when you are gone, I've seen so many families that are pulled apart when the matriarch or the patriarch passes on. They arguing about putting money in, arguing about this little piece of dirt, arguing about who gets the car, and arguing about everything. And then before you know it, somebody sold that land off for a little bit of nothing, because they didn't have any clue what the blood, sweat, and tears that you put into it to try to make it so that they can have something. I'm telling y'all today, y'all, how the little thing you say, get like me. Get like me. Because I told my children I'm selling everything before I die. Because they ain't gonna keep it. They're not gonna keep it. They're not even interested in it. But they're interested in coming in the money when mama got money. But then they're not interested in maintaining nothing. So maybe I'll have a grand or a great grand that'll come on board before I die. But that's what I told her. Those 6 that I gave birth to. But so y'all get like me. But okay, so now we're going to talk about a little bit about the he also spoke on the traditional full farm bill, that the bill is changing daily because they're always in Congress, they're always arguing about something, and you got the Republicans and the Democrats that just cannot come together on many things. So we're at their risk. So that's why you have to plan. You got to plan for if it goes well, and you got to plan for if it doesn't go well. And so if it goes well and your harvest comes out and you make money, great. But if it does not go well, what is your recourse? What is your backup plan? Sometimes you have to have a plan A, B, and C, because B might get you almost there and you can't get it. So you still got to have a backup plan to the backup plan. So A is your plan, B is your backup, and C is a backup to the backup. So you got to have a plan before you go doing anything on your farm and know what it's going to give you. Just like midstream last year, July, when the big beautiful bill was implemented. One good thing that came about for taxes is that because it was implemented in half of 2025, you all are able to take off 100% of farm equipment and the repairs and all of that, which it had already dwindled down to 80%, and they have projected to go every year from 80 to 60, but instead of it going backwards, it came all the way back up to 100%. And so that's the good thing, that anything you buy, keep your documentation is key. You gotta have proof. Myself, and Alex, as a representative of the IRS, we have to abide by their guidelines. And what they say to us is, we have to know that what we're putting on that tax return is accurate. And so many times people come to me with a prior year return or they've gotten audited, and what they do is they write their expenses and they put everything with a zero. That's a trigger point for the IRS, because they know you ain't calculated nothing if everything going to zero. So now they're gonna audit you. Now they want to see the receipt, and now they're gonna recalculate it. Now they're gonna tell you you owe them more money. And then if they find anything on there that they can find that was untrue, that's called filing a frivolous return. That say you wasted their time, you wasted their money trying to file your return, and you already knew you put something on it that you wasn't supposed to have. Case in point, 2022, when the farm credit, the fuel credit came out, everybody, all my folks, young folks, jumped ship to go to somebody who could get them some money from the fuel tax. Now everybody's getting that letter coming back to them and getting a fine for filing a frivolous return. And so the credit was for farmers, and most farmers didn't even use it. And so it was for the diesel that you off-road fuel that you use on your farms and your tractor or however else machinery you run with that. That's what the credit was for. But then somebody found out how to manipulate the system. So I've seen tax returns where a person might have made $20,000 and then they claim 10,000 gallons of diesel. And then they get like $20,000 from the government. So how you make that work? And so the thing is, I just want everybody to know, tell your family, tell your friends, they have implemented artificial intelligence into the IRS system. Mr. Elon Musk and Trump, that's why he was cutting food so bad about wanting everybody's information. So now they put artificial intelligence. So what that means is they're able to cross-reference anything you put on your return. So if you put a luxury vehicle and you depreciate that luxury vehicle, that they can automatically, the AI will pick it up and they're gonna shoot your return over for it to be audited. So this year, 2026, we started doing returns in January. A couple of my people started getting paid last week. The same day they got their deposit, there was an audit in the mail. But the audit was from the state. The state of Georgia last year audited 85% of all returns. They don't want to pay this money out because we have to learn that if you got a W-2 job and you got a 1099 job, that's the perfect storm, because now you can offset your expenses with that 1099 from the money you made on your W-2 or didn't pay. So when you owe the government and you didn't pay them enough withholding federal taxes, now they're going to have at the bottom, you owe so much money. But if you got the 1099 and you put the two together, now with your expenses can offset what you owe them. And so they don't want that to happen. And so now what they've done is all the sole proprietors, they pull their return. And then because they want you to have some type of credential. So on your farm, if you're not an LLC, just make sure you got an EIN number. Don't use your personal information. Get yourself set up as a business. It's great to do it both the LLC and the EIN, but if you get just one, it'll keep them off your back, because a lot of what they're trying to do is they'll say that things are hobbies if you don't have a structured business, a plan. So the plan is important not only in your taxes, but also it's important for the USDA. How many of you all have ever gotten a USDA farm loan? Okay, just one person. Oh, okay. But you didn't get it. Why? What's the biggest reason that nobody applies for a USDA farm loan?
Exposure.
What is?
Exposure to loss. Losing your farm.
Losing your farm.
Yeah.
Well, you don't put your farm up for collateral on the USDA farm loans. You actually have to have a business plan. You have to tell them how you're going to spend the money and how you're going to pay the money back. So if you got a business plan for your farm, you know in your head what you need. Everybody is different. No two farms are the same. No two people are the same. So that's why you need the strategy to be able to get the USDA farm loan. I do those applications for farmers. And so I know what's required, and that taxes is one of the biggies. You gotta have your taxes done. They want the last 3 years. And then you gotta have a business plan. You gotta have the plan that shows what you plan to do, plant, who's gonna get it, how much it's gonna cost, what's your yield gonna be, what your yield was for the prior year, and then if you're gonna make enough money to pay them back on that loan. So most of us just say it's too complicated, so I don't want to fool with it. And back years ago, I do remember they did used to have to make, you had to have your SBA will make you use your property as collateral. But USDA, because their operating loans are due at the end of the year. So they want all of their money back. So you have to, when you do an operating loan, you renew it every year, so you get enough that you know you can pay back to work with, and then you pay it back before the end of that year, and then the next year you go and do it all over again. So they are not hard to get, and I advise anybody who's struggling, to try to go and apply for the USDA farm loan, operating loan. So FSA and USDA, it's USDA. So like when you call your FSA office, you're gonna hear the recording and then say, if you want farm loans, press this, that's what you press. And the one was in Dawson, it's gone. The guys that were there are in Moultrie now. So, and Cameron is in Fort Valley, and Bryson is in Moultrie. They were there in Dawson before. So those guys are really good about helping you get your application straight and helping you walk through it. If something's not right, they'll tell you they need to get this, and that. But it's not a hard feat to try to get that money. Okay, and let's see. This is the bottom line for small farmers, the pros and the cons. We have stronger farm safety nets, and what they mean by safety nets is that the insurance. So the safety net is that you're able to now insure your crop where you wasn't able to do it at a cheaper rate, and with stronger elements in it that will help you if you have a drought, a flood, or just death of your animals. That's what they mean about the safety net. More acceptable crop insurance, tax incentive for farm investment. Now, when Alex was doing her presentation and she was asking you all the questions about what was capital and what was not capital. So the tax incentive for farm investment is building on your farm. So your infrastructure, if you build a new barn, if you repair something on your home, that's the incentive for farm investment. They're telling you you're investing your money in your farm, and now you could write it off as tax. So that's what they're meaning by incentives for farm investment. And then opportunity for improved financial planning. And I don't know how they think that this is supposed to help you improve your financial planning, because it's basically up to each individual to write up how they want to manage their farm. So there are some mixed challenges in this bill. Changes to nutrition programs, the SNAP. Not all farm programs are fully updated. They're still changing every day. Future policy changes are most likely, and we already know that. And the key takeaway is to understand new farm support programs, to review crop insurance coverage, and to take advantage of tax planning opportunities, and to monitor your future farm legislation. So as we continue to go down this road as farmers, we just keep abreast of what's going on in legislation and see what changes and what implements. I am going to take advantage of Mr. Drake's announcement about the, I think it was ELP or FLP, but it was a loan that was coming, and it expires March 16th, I think. What did you say? So I'm gonna go in there and see if there's any money we can get. So y'all get my card and y'all get my number and y'all call my office and say you find out anything about farm money. And so, what did you say? I wrote it somewhere. But anyhow, that's the end of my presentation. You all have been cooperative and a blast, and I appreciate you, and God bless you all. Y'all have a good day.